Hi guys, Tim Melvin back in from the wilderness. I've been gone for a little bit, had some projects that were clogging up the calendar, but those are now in the past, not to be repeated. So we'll try to get some more videos up here for you guys. Um, this week, the big news is going to be the Fed meeting in Jackson Hole. There'll be lots of speeches and socializing and papers submitted and read. Most people would find it boring. I wish I was there. But the highlight, of course, is going to be the speech by Fed Chair Jerome Powell on Friday morning. Now, a lot of speculation about what he is and isn't going to say. I'm really hoping that he's going to come out and be aggressively hawkish. Last month at the news conference, he made some remarks along the lines of, well, eventually we are going to stop raising rates, and it might be appropriate to think about bringing them back down. The market took that to mean that the Fed is almost done with inflation, so we can all relax and just get back to buying stocks. And it really triggered a sharp bear market rally, and I have no problem or issue with bear market rallies. They're a very normal thing. However, it's not what he meant. And he's made it clear that's not what he's meant. And dozens, literally, of other Fed officials have come out. Everybody, Bullard, Neil Kashkari, uh, uh, the woman out in San Francisco whose name is escaping me at the moment, Charles Evans of Mary Daly, Charles Evans from the Chicago Fed. The guy from the Richmond Fed was very hawkish. And again, I totally forget his name. That's terrible. Was just out and making very hawkish statements that we're not done, guys. We're nowhere near being done on inflation. Um, it's I don't get it. It's you get inflation goes from 8.7 to 8.5, and everybody thinks that inflation's over. No, guys, it's still 8.5%. Inflation was not zero in July; it was 8.5%. It just didn't go up any higher. Okay, if you look at core PCE numbers, they were actually up. The stuff that we actually spend money on was up. Gas was down. There's going to be a price to pay for that, guys, because gas is down in large part due to the strategic petroleum reserve that we have been continually to release into the market. Um, that's got to stop at some point, and start in the fall, they're going to have to start buying it all back. China has been a factor in global oil markets. Every time there's a COVID lockdown there, it does slow demand down a little bit. That also is eventually going to stop. There's a supply demand imbalance in the oil and gas markets. It has not been fixed. Take a look at natural gas prices. They simply will not stop. There's no economic incentive for producers, either domestic or foreign, to ramp up production to meet increased demand. This is horrible energy policy on a global basis. Everybody's trying to go green. I'm all for that. Let's go green. But let's acknowledge that you can't get to green without burning oil and gas right now to meet the supply demand, because there's not enough renewables in the world to get the job done at this point in time. Someday, eventually, yes, there will be enough. That day is not today, and it's not soon. We need more oil and gas, but so far, nobody stepped up to the plate and said this is what needs to happen. Without the political will, it's not going to happen. Um, there's some signs that this rally is starting to roll over. We touched the 200-day moving average, which, when Andrew Lowe and his team tested all of the various technical indicators, this was one of the ones that they said, yeah, this actually has some importance. And Paul Tudor Jones has sworn by the 200-day moving average for his entire career. They tipped it, looked like it might break over, signaling that perhaps this bear market really was going to be one of the quickest bear markets in history. But it's turned back and it's rolled over. We're down again today on fears of just exactly what Jerome Powell is going to say come Friday morning. So we turned back with, relative strength that was over 70, and now it's kind of, by the way, anytime a major index, relative strength is almost worthless for trading individual stocks, in my opinion. However, well, I'll take that back. It's better on the buy side. A very low RSIs of financially solid companies has some meaning, but for trying to trade it based on oversold and overbought, worthless. Really effective on large stock indexes. Go back and take a look. You can test it if you're of a testing mind. When major markets get over 70 on the relative strength index, it's not a precise indicator. It's not going to hit 70 on and stop and go down on Tuesday. It could hit 70 and go to 75, and even a little higher. But at some point, we're going to see some selling come into it, because it's very hard for markets to maintain that type of momentum for a long period of time, especially by the time they get to 70, they've been going up for a while. This is, kind of the market blowing off. We got up to 70 and rolled over. That usually leads to more selling. We'll see how it all plays out. I'm not a technical analyst. These are observations. We make all of our final decisions based on valuation and the quality of the company. However, it does look like this market may be rolling over and losing a little bit of momentum. And interestingly, B of A released a note last week, and this was a pretty interesting note because they said no market has ever bottomed in the times that they've studied. And it was an extended period of time, apparently, that has ever bottomed without this one indicator being triggered. And it's not even close to being triggered. Simply put, in order for a market bottom to be in place, two things you would have to take the consumer price index inflation number, currently 8.5%, and add it to the market PE, currently 20. So we got a reading of 28.5 right now. This has to go under 20, or according to B of A, there is not a market bottom in place. We got some work to do. Remember, the other thing that we do know, every other tightening cycle, the Fed has taken rates to real rates positive all across the curve. Fed funds all the way out to the 30-year. Guys, right now, Fed funds is at about a negative 6.5% real rate. That's coupon rate minus inflation rate. So there's got to be some passing. There's a ways to go. Jerome Powell has to make it clear this week that, Cinderella's over. It's time to go home from the ball. Beating inflation is his number one mission. He has to make it clear they're going to raise rates and keep them as high as they have to be in order to get inflation back under 2%. The markets aren't going to like it, but they're just going to have to take their medicine like big boys and girls. Now, I hope I'm right about this because truthfully, it's not going to hurt my little bank portfolio at all. They tend to be kind of market agnostic. You'll see a little bit of selling, but most of these have long-term owners in them. What institutional money is in there is very long-term in nature and maybe even activists trying to force a sale. But, most of these small banks have strong insider and local ownership. You're not going to trade in and out of it because these things don't trade 15 million shares a day. So they tend not to react to the markets as much as they might react. Some of the larger banks and larger securities might react. So more importantly, I would love to get a chance to buy. REITs are getting close, according to Jones Lang LaSalle, the real estate firm. Real estate investment trusts right now, on average, are trading at about a discount of 15% to net asset value. And there are some segments of the market that I would really love to be an aggressive buyer. Love to see enough selling to come into the REIT market here to bring out the insiders in force, giving a confirming signal that it's time for everybody to get back in the pool. I am seeing some activist activity in the real estate investment trust market, and that's pretty exciting. That is one sign that prices are getting down to the point where it might be time to step up and be an aggressive buyer once again. And of course, we are super bullish on higher yielding banks. These tend to be a little bit more liquid, but I feel like the bottom may be in, or at least close to in, for some of these. If I'm wrong, I'll just have to ride out the tide. But we've got high quality banks yielding 4%, trading at 8 times earnings. One of my favorite banks right now is yielding over 7%, trading massive discount to the net asset value of the shares, and that's in our banking on profits portfolio. And we expect great things from that bank, and it's been strong with the recent bear market rally. And then there's other banks trading over 6% with 8 PE ratios. So there's an opportunity there. We'd love to get an even bigger sale price on some of our higher yielding banks. And we'll talk about some. We've talked about some of those guys. New York Community Bank is one of our favorites. NYCB. Love Northrim Bank up in Alaska, NRIM. Not only are they paying a nice dividend of about 4%, they're also buying back about 4% of the bank every year. Well-run, business-oriented bank, formed in the aftermath of the 1987 stock crash, and oil prices, of course, collapsed at the same time, and a bunch of the Alaskan banking industry just disappeared. So these guys stepped up, run a high-quality community bank. It's one of those stocks you can buy, and I think just literally hold on to forever, basically, unless it's taken out. We're also seeing, a little bit of selling in some major technology companies and then smaller technology companies that I would really like to be involved in if prices continue to move lower. And again, we're going to be watching insider activity in those names real close as a signal that, hey, we're getting there. So, low valuations, a little bit of insider activity, and there's some tech stocks we could get interested in. And look, I've said this before, but I am wildly bullish on the 4 to 5 year outlook for cannabis companies. I'd love to get some great companies like Trulieve at even better prices. And by the way, Trulieve, I think, is going to be the dominant player, at least here in the Florida market for a long time. Once cannabis does come off of Schedule 1, we will see probably a takeover offer. It's that well run a company just to get that infrastructure and the supply. It would make sense for a beverage or cigarette company that was looking to get into the market to use Trulieve as their entry point. So love that stock. If it moves lower an extended selling period, I'm going to be all over it about buying some more. Yes. Now, if we do see selling, and this is a strategy that I use it all the time. Okay, and it usually does fairly well, beats the market over time, but it's exceptional in really bad markets. When you get markets that are down a bunch, 20, 25, 30%, buying stocks that trade for less than what I call their rational liquidation value has usually produced triple-digit profits over the next 12 months. I think it's something that just should be part of your regular. You should have a small portfolio dedicated to that. And when there's lots of these stocks around and more opportunities are being created, and you're seeing these companies with strong balance sheets, pretty good businesses, but just, out of favor, off of Wall Street's radar screen, whatever the reason is, they're trading for less than they could be liquidated for. It's time to get in there and buy a whole bunch of them. That's a strategy I've used throughout my entire career. And like I said, we're starting to see some develop. If really starts to get going and we see a whole bunch of them, that could be another signal that a major buying opportunity has been created. And it'll be time to pull that weapon out of the quiver and put it to work. So just taking some notes here. Okay, guys, that's really about all I have this week around. Been a great week. The Orioles have had this massive comeback. We're actually in contention for the wild card. And if the Yankees keep playing the way they've been playing, we could quickly get into contention for the division title. Most folks don't see that coming, but I'm a little bit of a dreamer when it comes to my baseball teams. I've got a Kindle full of good books. Everything's good. I want to apologize to all of the fast food takeout places down here in Southwest Florida. My wife is coming back from that trip out to Colorado with her siblings and her father. She'll be back Wednesday, so I'm afraid business is going to drop off dramatically for you guys. Anyway, guys, I'll try to get in here and be a little bit more regular with these videos. Hope the markets are treating you well. Be careful out there. Powell could really shake things up, and we'll see exactly how this week plays out. I'm Tim Melvin. Thanks for watching.